What's up, everybody? Welcome to Heresy Financial. Today, I'm giving you 3 asset classes that look to me like they are on the verge of a breakout, ready for an explosive move. And don't worry, it is not gold or Bitcoin. I know I've been making a lot of videos about gold and Bitcoin recently, and it is neither of those. 3 different asset classes ready to break out. Ready? Let's dive in. All right, guys, so we are looking at 3 different asset classes that look like they're on the verge of breaking out. And the first one, I apologize, I'm a day late. It looks like it's already started its breakout. And then the last one that we're going to look at is actually the driver behind the first 2 breakouts happening, the driver behind these 2 asset classes. So first one, we're looking at commodities. Commodities are like the orphaned child of the investing world. They've been thrown in a garbage, thrown in the trash can, forgotten, shoved off in the corner. And everybody hates commodities right now. They seem like over the last long time, for years, they've been like the surest way to lose money in investing. Now, they had a nice rally from the bottom in March because they bottomed out there, then they've come back. But for the last few months, they've been consolidating. And if you take a look at this chart, perfect setup here. They have just today started their breakout. And I would not be surprised, especially with the macroeconomic environment we're facing right now, where we have potentially a lot of new regulation coming in, a lot of new spending. It's this whole entire political and economic environment that we're in right now, inflationary. This is a very bullish environment for commodities. It causes the price and the value of base materials to go up, to go through the roof. And so it looks like we're starting to see the breakout here from this consolidation. And I wouldn't be surprised to see this bull market in commodities to really take off and be strong and potentially be one of the best performers of the entire next year. Now, there are some really easy ways to play the commodities space. If you're just using a regular brokerage account or an IRA, you can get some pretty easy to use ETFs. Most of the time, depending on where you're trading, they're going to be commission free, like PDBC. This is just an example. It's not a recommendation. And so when you're looking at ETFs, you can use an ETF screener wherever you do your trading. You just look up commodity ETFs. Another easy source to find ETFs that track something specific, you can go to ETFDB, that's etfdatabase.com, etfdb.com, and you can just search. They'll give you a list, and then you go back to your broker and see if they have it there, see if they charge commissions. One thing to watch out for, though, a lot of commodity ETFs, they'll issue K1s. This means that the structure of the company itself has pass-through tax implications for you. Even if you're investing in it inside of an IRA, you could still potentially have tax implications from it. So that, like PDBC, this is one of them that does not issue a K1, so you can find them that, find certain ETFs, commodity ETFs that don't have K1s associated with them. Okay, that's the first space. And this second asset class that is on the verge of a breakout is the NASDAQ and the S&P 500. We've already seen a huge rally in value and in small caps recently. Even today, the Russell 2000 is up over 2%. It's just had a massive, just great bull run recently, and it looks like we're about to start to see a little bit of catch up from the last few weeks happen with large tech stocks and the S&P 500. And I know right now there's a lot of froth. There's a lot of euphoria. You look at the fear and greed index, it looks very greedy right now, and it looks overbought. And it's quite possible that we get a sell-off here. We're hitting some resistance. It's quite possible that this is at least another short-term top. To me, looks like we're on the verge of a breakout. This could very well be the start of the blow-off top, the final melt-up, the crack-up boom that happens with stocks where there's just capitulation from short sellers and sellers, and all the cash rushes in because there's nothing else to do. Stocks always go up. And I'm not saying that that's true. I'm just saying that that is the sentiment that you usually see at the end of bull markets, that euphoria, that fear of missing out. That hasn't quite set in yet. There are some indicators that show that there is greed going on in stocks right now, but overall market sentiment, we haven't quite gotten there yet. And then the third asset class, which is contributing mainly, it's the main contributing factor to commodities and stocks going up right now, is actually the dollar. And this is a breakdown potential, not a break up potential. And so if you look here, we've been over and over and over hammering at this support line, and we we had a false breakdown. I believe that was on Friday. If you look at this little where we broke below this support line here, popped right back up, and now we are retesting it again. And so it looks like the dollar is about to dump. And when the dollar falls, that is a direct boom to asset classes that are either pegged to or denominated in, which are different things. Pegged and denominated are different things, but it's a direct boom to those types of assets. Now, there's a long causal chain here, but essentially we need assets to continue to go up in order to keep our government and our economy solvent. If asset prices start to drop, including debt assets, equity assets, as well as debt assets, if asset prices start to drop, we start to see insolvency roll across our entire economy. And so the only way to delay that as long as possible is to continue to try and put downward pressure on the dollar. So this is the DXY. This is an index. This is the dollar measured against other currencies. Again, there are some easy ways to play this. There are some ETFs like UUP and UDN. These are bearish and bullish ETFs on the dollar here. And so I don't like using instruments like this for long-term plays because there's beta slippage, and beta slippage is simply a bleeding out of value over time. And so even if you're right, even if the dollar, let's say, goes down over time, if it doesn't do it quick enough and in a straight enough line, if there's volatility on the way and you're invested in a bearish ETF on that, you could still lose on your bearish ETF because the value bleeds out of these over time. And so I don't like using these for long-term plays, but for if you're hedged or if it's for a short play or a day trade, that's more of what they're designed for. Now, if you're wondering, a breakdown in the dollar, that should also be good for gold, especially considering how good it will be for commodities just in general. So it should be good for the precious metals space as well. So those are three asset classes that look like they're on the verge of a breakout. We've already seen the breakout start to happen with commodities. We might have a retest to make sure that this is not a false breakout, but in either case, these are the three areas that look like they're about to make a move. And as always, not investment advice, not any trade recommendations, specific investment recommendations going on for anybody specifically. This is meant for educational purposes only. And as always, I really appreciate you guys. Have a good day.